Hello guys, Fidel here. Welcome back to the channel. So I took a number of trades, about 4 in number, few days, and I thought I should make a quick video and show you how I took the trades. And as you know, I'm currently focusing on one pair, and that is pound dollar. And the reason is that I need to it helps me to focus way better, and also for the sake of having a peace of mind. And since my system basically works in trending markets, so instead of focusing on multiple pairs, it is way better for me to pick one pair that is trending and then focus on it. So currently I'm focusing on the British pound US dollar. It's not because my system doesn't work with all the pairs. Basically, yours, if you have a system, it should work with um, all the pairs, all the currencies, all the instruments. It has to work with all the instruments. However, you need a peace of mind. You need to focus, to have a better focus. And for that to happen, I think focusing on a few pairs, like one or two, is way better. And at the moment, I'm focusing on the GBP So I took about 4 trades in number, and I thought I should make a quick video just to show you guys how I came about these trades. Obviously, you can see on the daily, the market structure on the daily has been bearish after price grabbed this liquidity here, which comes from this far left, this high, okay, and then after price has taken this low right here, that's a grab of liquidity, and then breaking this structure, this last candlestick becoming our bullish order block. You can see how price broke it, came back, tapped into the open of this candle, and then price started going up. So I'm gonna switch on the 1 hour time frame. Okay, so the first trade, actually it was right here, and I'm just gonna use this feature so that we can see what happened. The first thing I noticed was that price uh, grabbed the liquidity from the previous day's high. So previous day's high, there it is. So price grabbed liquidity from here, and yeah, a grab of liquidity above the previous day's high. And then we have this candlestick that grabbed liquidity, and that is about an hour before my kill zone. So the thing is, my kill zone could differ a little bit from your kill zone, because as you know guys, I trade the first 2 hours of every trading session. London session, I look for an opportunity within the first 2 hours, and then for the New York session, I also look for the opportunity in the first 2 hours. That means 4 hours in total. So I'm gonna go on the 50 minutes time frame, and then what I'm gonna be waiting for is to see if price is ready to reverse. That means I need any reversal signatures to happen. It could be the market maker buy and sell models, but in this case it would be a market maker sell model. It could be a break in market structure. If I could show us what I mean is, I sorry, just a second. So we have support, okay, price is coming, we take it, then price breaks this low that was created prior, this support resistance, actually, this resistance to be taken. And then I would wait for price to come back, right? Oh, come on. Yeah, like so. Price would take this, would come into this high, and that is where you look for your fair value gaps. You look for the order blocks or breakers in here, and then price to go down. And for the shift in structure is sometimes that price will take this resistance, break, but it doesn't return in here. It happens, it will make a high, break, and then we come here. I look for the order block or breaker or fair value gaps, whichever you look for, and then I would sell. All right, so let's see what happened then. We're still on the 15 minutes time frame. In this case, I'm still patient, waiting for the right moment. There we go. Okay, so we had at 8:30 New York time, we had news that it created imbalance right here in this down candle, and then in the process of that imbalance creation, we had price breaking this short-term low. So we had the BMS right here. If you see this down candle, that was the previous down candle before price grabbed the liquidity. If you've been watching my videos, I mentioned that in a bullish market, price is going to respect down candles, and in a bearish market, price is going to respect bullish candles. So it will tap into the bullish candles and then continue going down. So in this case, we had a bullish momentum and a down candle, price tapped into the up candle, price went up, and then exactly at 8:30 we had this huge bearish candle that closed bearish below this down candle. Now price had to come back up to cover this imbalance in here, to fill some orders in here. And if you grab your fib from this low to the high like that, what we need is price to tap above 50% level. Why? Because you know about premium and discount. Price is coming from the discount, it has to tap into the premium for us to sell, right? So I open my sales right here. Now let me also mention that when price blocked this down candle, okay, this down candle became our breaker block in here. So my stop loss was above the high of this down candle, and my entry was right here, and I was focusing to 1:3. 1:3 right there. Now let's see what happened. I'm tagged in. Look at that, guys. Price hit on the closing price of this down candle, and then price immediately rejected, and price is going down. So let's see what happened. And then 1:3 is given. That was easy trade. So we have a market maker buy model, a shift in structure. You can see this wasn't actually a market maker sell pattern. Even if you go to M5, you see it's not. We only had this gap that price came to fill in, touch the breaker, and then price goes down. 1:3, and most of the times I would just take 1:2 depending on the timing. So sometimes I would wait for an opportunity the first hour and nothing happens. The second hour, as the second hour is almost closing, then the market gives me an opportunity. So since I'm almost going into the timing when there's low volatility in the market, I'll just grab 1:2 and then I'll be done. So let's see the next trade. And yeah, I'll just remove this. So the next trade actually happened right here on the 30th of May. 30th of May. And look at that. Let me explain something. If I could maybe switch on the 4-hour time frame or 5-hour. Let me use for 5-hour time frame. What you see right here, and listen very carefully, we see price breaking this low right here. After creating that high, we break low. That is a break in market structure. Price came down, and here price tried to come back into this structure. Now I have a rule. All right, one of the rules is that when price breaks a low, a high, before the return, to mitigate that, for mitigation, price has to touch a 50% of the previous structure or 100%. That is to tell me that this was actually breaking market structure and not a liquidity grab. Let me repeat that. So now you can see we have a swing high and a swing low that has been taken. Okay, now if I use the fib, most of you use it this way. So from this high, okay, to this low, and this is a fib extension. Okay, the thing is, when the price comes down, it needs to create at least 50% or 100% of this whole structure from this high to this low. This structure that price has taken out, that price has broken, price has to go deeper up to 50% of this structure or 100% before price could start coming back up for mitigation if price has to continue going down. All right, now as you can see, when price was trying to come back up here, we had not touched the 50%, neither 100%. And that's why when price tried to come up, it failed, went deeper down here. All right, so that means we still have unmitigated orders from this structure because price is supposed to come back up. We have unmitigated orders in this structure right here. So if I use the fib again, just to show you something, you can see even on the third day, price came up, touched the 50%, and then price dropped. All right. Even if price has dropped from here, it doesn't mean that the orders have been mitigated because price never came into our premium. We are still in the discount. That means we are still in the discount marketplace for price to be bought until price comes into our premium. So we still have open orders in here that price has to mitigate. All right. This is some um, good lessons on market structure. All right, so now right here on the 30th, that is when price broke a 50%, now comes into our premium. And what do we see in our premium? We have this order block. This up candle is an order block. And why is it an order block? That is because before price went down, we took this high. We took this high. Okay, we took this high, which happened to be the previous day's high. So this candle that took out this high, that becomes the bearish order block, and price never came back into it. So now here on the 30th, finally price came out of the discount. If I put back the fib, you see that? So we have the discount in here, that is the buy zone, and then we have our premium up there. So you can see for how many days? 1, 2, 3, 4 consecutive days, price was still in the discount. And if you look at EU, this price was making lower lows on EU, but Gbpusd was making these highs. That is a divergence. And then when you switch on 1 hour time frame, what else do you see from here? We see a fair value gap right here. I beg your pardon. There we have a fair value gap. We see, I'm going to remove this. We see a fair value gap. And that is why I tell you that the way I trade fair value gaps is different from how most people trade it. Because my fair value gap, I don't need to hunt for it. I don't need to look for it. It has to be on the open. I just have to look on the charts and there it is. I don't have to keep looking where is the fair value gaps. No, if it's there, you will see it without having to hunt for it. You see that? So when I came on H1, it's there. I don't need to cut through the candles. It's right there. That is the fair value gap. The distance between this candle, the low and the high of this candle, you see that gap? That is the fair value gap. And you see price came into it, price tried to go through it on the 1 hour time frame. That is okay, but no candlestick ever closed above it. Also the 1 hour time frame bearish order block. Now when we switch to M15 right there, now pay attention here, there, M15, we have this up candle which is going to act as support for price to go up. I need price to break it for it to be a successful break in market structure. I'm still waiting. There it is. Now we have that break, and now we have an up candle with fair value gap right here. So my sell is in there, stop loss here, and since it was almost price was almost, the second hour of my kill zone was almost finishing, so I took 1:2. So let's see what happened. There you go. I'm tagged in, and there 1:2. Easy. All right, as easy as that. So now let's look on the fourth. It was right here, easy. Price took previous day's high. I'm waiting for a shift in market structure below this low. Okay, we had it here. I'm waiting for price to come into the premium. It happened here. We touched an up candle since we are waiting for sales, and my entry was here. A small drawdown of about 2 to 3 pips. My stop loss there, and 1:3 right here. 1:3 right here. As easy as that. So you can see all 4 trades were based off a grab of liquidity and market structure, because I focus on market structure and market liquidity. That is it. So I hope this has helped you. Stay safe until next time. Bye.